Hey, grain of salt here at Z06, Z07 on X. It's December 22nd, and I just wanted to give a quick overview on a book I wrote. Based upon what happened in 2024 and 2025 with Bitcoin Treasury companies, I thought it would make sense to do an analysis of what happened, and the best way to do that would be to write a book. So the book is approximately 60 pages of hardcore details about what happened to Bitcoin Treasury companies. In the next few minutes, I'm going to try and take you through a quick summary of what's in the book. But so with that said, let's get started. So the name of the book is The Rise, Fall, and Reemergence of Bitcoin Treasury Companies. And I truly believe that they will reemerge. I think this second wave of Bitcoin Treasury companies, which came out in 2024 and 2025, basically established a way to look at what happened, what works, and what doesn't work. And one of the things that didn't work is capital efficiency. These are not spot Bitcoin ETFs where the value of it is just basically we just buy Bitcoin and hold Bitcoin. These are operating companies, and they thrive basically on capital efficiency. And one of the benchmarks for this is strategy. And we'll talk more about that in a minute. But one of the points that I changed in my profile is liquidity is the enemy of convexity, and scarcity is the friend of convexity. And what does that mean? It kind of doesn't make sense at all what I'm saying there. Well, if you're a Bitcoiner, you totally understand convexity, and you understand liquidity, and you understand scarcity. So how does that work? Well, Bitcoin is proven scarce. We know there's only going to be 21 million Bitcoins. That's all there'll ever be. And we know that approximately every 4 years, every 210,000 blocks, the new issuance is cut in half. So the net new supply that comes out is always smaller, right? So we already know that. That is scarcity. And why do we like that? Because we like price discovery. Price discovery, right, happens when there's a finite amount of a finite amount of Bitcoin that are out there, and the price rockets higher because they're like, oh, how high can this go? That is convexity. For a given amount of dollar that goes into it, it's equal to $2 or $3 on the upside. Now, convexity also works to the downside. It works to both. But liquidity, if we were to say, oh, there's not 21 million Bitcoins, there's 210 million Bitcoins, immediately everybody would be like, oh, that doesn't sound good at all. And that's where we come down to capital efficiency. So for Bitcoin Treasury companies, I basically invented two metrics so you can compare different companies of different sizes. It's shares per $1 million of Bitcoin held and shares per $1 million of equity market cap. And throughout the book, I explain both of those, and that's critically important. There's also two metrics that really led us astray. BTC yield. If the biggest company, right, strategy, can only acquire at 20, 25% BTC yield per year, meaning it's the amount of net new Bitcoin it adds to their balance sheet is that. The catch is with a smaller company, right? If you want to have better metrics than strategy, you have to be more capital efficient. What does that mean? You have to have less shares outstanding, right? So I'll give you a good example of this. Strategy has 671,000 Bitcoins. Just round it down to 600,000. They have 300 million shares outstanding. Okay, that's 500 shares per Bitcoin. I like wording it that way instead of Bitcoin per share, because you have some 0.00 number that doesn't make a lot of sense. So when you look at it this way, strategy has 500 shares per Bitcoin. So if you're going to start a new company and you want to compete with strategy in the Bitcoin Treasury space, because you're beholden to the same accounting. It's balance sheet accounting, not income statement. If Bitcoin goes up 10% for you, it goes up 10% for strategy. So from that perspective, this becomes the really important metric, not BTC yield, right? It's how efficient you are with the shares. So this is where the problem came in. Let's assume you had 6,000 Bitcoin, right? And you're like, well, strategy's got 500 shares per Bitcoin. But you want to grow into that metric. So you want to start off smaller because you want to say, oh, we have more Bitcoin per share. And the only way that you could do that is by having less shares outstanding. So with that said, what you would try and do is you say, hey, we go to your book runner, your investment banker, and say, we're gonna go IPO or reverse merger or SPAC. And what we're going to do is we're going to issue 100 shares per Bitcoin. Well, 100 shares per Bitcoin and 6,000 Bitcoins means you only have 600,000 shares outstanding. No book runner, no investment banker is going to take you public for that. And the reason why is because your share count is too scarce. And your price would be incredibly high for those shares. You'd be talking about a stock of somewhere in the neighborhood of $1,000 a share. That wouldn't make sense. We want to have liquidity, a lot of people, retail, to come in and buy it. So that's where the problem started. Whether it was a SPAC or a reverse merger or it was a pipe deal, they issued way too many shares given the amount of Bitcoin they held. And if you have 1/100th of the Bitcoin that Strategy has, right, then in order to be more capital efficient, you should have less shares per Bitcoin. And so really that's what the book goes through. The book is 60 pages of detail. You could screenshot any part of it you want into AI and ask questions. So basically for $10, instead of getting on a space with me and asking me 50 questions, buy the book for $10 on Amazon. Upload those sections that don't make sense to you or do make sense to you and say, change these parameters or explain this to me in a different way. I don't get it. And that's what AI will do for you. And I wrote it specifically like that. I grant a license in the book for you to upload it for personal use to AI. That's really, really different. And so what I did here is I did this for a couple things. I want people to become better investors. I want CEOs, CIOs, and I want investment bankers and book runners. I want them to understand this space. I want Bitcoin Treasury companies to be successful. So Bitcoin Treasury 3.0, right? What's that? That's 2026 and going forward. The initial Bitcoin Treasury 1.0, that was Strategy, right? They defined the market. They're the largest company in this space. Michael Saylor, it's 4.7 million followers. Bitcoin Treasury 2.0 is what took place in 2024 and 2025. And with that, if companies change the way that they do business, if they look at their share counts and figure out what to do, and it's possible to fix this without selling your Bitcoin. And I invite any CEOs or CIOs or investment bankers or book runners to contact me. I'd be happy to talk to them. There's a lot of different things we can do to fix this. But going forward for 2026 and Bitcoin Treasury 3.0, I wanted this book to be out there. I want these CEOs and CIOs to read this. Call me and ask me a question. I'll explain why this happened. But the capital efficiency comes down to this. You're running an operating company that's balance sheet driven. And the revenue growth, which is the price appreciation in Bitcoin, is the same for all the companies in this space, right? Only the nominal amounts change when you have more Bitcoin. So therefore, it comes down to efficiency. So with that said, thank you. Going into the holiday season, I want to get this video out real quickly. I'll provide a link to the book, and then I'll do some spaces on it after the holidays. And thank you for listening.